Give and Grow. What is up? Eric and Ryan coming at you today. Man, it has been a while, brother.
Yeah,
It's good to see you.
Yeah, it's been a little bit.
It's good to see the fam as well. Hope everybody's been doing well.
Yeah, they have.
Man, I'm excited. What a crazy time in the markets these last couple of weeks. What's the Nasdaq is down 10% in 2 weeks, something like that?
Yeah. At the time of this recording, we're recording this on August the 3rd.
Yeah.
So yeah.
So, my brother, what do you want to discuss today?
Right, today we're gonna be talking about a topic that I think that some people probably have been talking about for a long time. It's a fun topic, at least to me, because I feel like that these topics are coming up a lot more in recent history with some people that I know, some people that I don't know. It's boomers versus millennials.
Oh boy.
In general with like finance. It's something that we've kind of talked about periodically, like, we bring up stuff about how things were different back in the day compared to now. But I found this one article and I was like, Eric, we got to do this because it's pretty interesting information here. There's a bunch of like key findings. This is from a website called thehill.com, and the title is Are Millennials Worse Off Than Boomers? Here's how they stack up financially.
Let's hear it. The
first key finding, and by the way, this article was from 2023, so things could be a lot different now, and they could be different in the future. But as of 2023, this is how this stuff is stacking up. So it says here, the first category that we'll go over is wealth. It says millennials at the 90th percentile of wealth distribution in the U.S. possess about 20% more wealth than boomers did at 35, which, the numbers are showing 457,000 versus 373,000. However, the median millennial had 30% lower wealth than the median boomer at that age. So it's saying
that's populism.
Yeah.
Talk about it all the time.
Yeah. At 35, it was showing that boomers had more wealth when they were 35 compared to us at 35. Now, I'm 31. He's 34.
34.
He's 34. So, he's almost at 35, basically 35. So what do you think about that? Like, I know that it's not like a mystery that millennials have a lot less than the boomers did at that age.
I think a big difference is home ownership and equity that you have in a house. I mean, we talk about it all the time, but a lot of millennials don't own their own house right now.
Yeah.
I'd imagine back then boomers had bought houses, they had put equity into it, and that can definitely increase those numbers.
Yeah.
So I mean, I don't know 100%, but if I had to guess, I'd say it's probably the biggest difference.
Yeah, I'd say home ownership is probably the key, because if you were to look at like jobs between millennials and like boomers, I would say that millennials have, considering that as time goes on, more millennials are taking on those roles that boomers had before. And like there's a lot more work that millennials grew up with. Like for example, me being in tech, tech was it was like the Wild West back in the day, where like very, very few boomers had access to. Now, I'm not saying that like boomers are not in tech, but more millennials are growing up with these technologies and they're learning them earlier. So, and also too, just with time, more boomers are starting to retire now, and more millennials are starting to take on those jobs. So I think it makes sense that more millennials are starting to make more now at 35. But I think you're right with overall wealth. Boomers buying that $100,000 home when they had a $45,000 salary back in the 80s and the 90s, and now it's worth like $400,000.
Yep.
Most of the wealth is going to be kept up in there. Yeah, I do also want to talk about that as well. How like real estate in general is it's definitely affected, because we already discussed how like a lot of millennials don't have homes. They're all being held up by the boomers. And I don't think that's, I don't have the stats on that, but I would imagine that most boomers that have their home are not trying to sell, because they probably refied at like 2%, 3%. And they're like, yeah, why should I buy a home right now? So
even if their house has already been paid for, why sell and then go into a house where you may have to take on a mortgage with an increased interest rate right now?
Right.
Yeah, I mean, I'd be doing the same thing, honestly. I mean, it's just
Yeah, it's no.
world,
I mean,
it's just the
yeah,
world we live in right now.
right. And that's fine. You know, it's nothing against the boomers on that. You know, because you know, like what we're saying, I'd be doing the same thing, and you know, you got to consider yourself, man. You can't be. You know, I think that like a lot of people are like, oh well, if these boomers would just do this, it would help us a lot. But why? You know,
Right.
it's like why would they put themselves into a bad situation? Or sorry, not a bad situation, a risky situation, just so that you know people like you and me can afford a home. Like, you know, who would do that? You know?
Yeah, and at that point in your life, you just want it simple. You know, you kind of want to enjoy the things you want to enjoy. You know, your grandkids. You want to preserve your wealth. So I mean, I think they're just doing what's logical right now. So I respect that.
Do you think that like a lot of the boomers have a lot of equity in like stocks and all those things as well compared to millennials?
I think millennials if you're comparing 35 to 35, I think millennials have more in stocks and, you know, cryptocurrency and stuff of that nature. And then vice versa, I think that the boomers have more invested in real estate and their homes and stuff like that.
The stock market has been around for a long time. Do you think that it was pushed more for them to get into real estate over stocks and like companies, or do you think that like real estate was more affordable than stocks?
Yeah, I always talk about the psychology of investing, and you got to realize the generation before them, you know, a lot of those, you know, their parents are coming out of the Great Depression, and so that psychology probably sticks with a lot of them. You know,
no, that's true.
Real estate to them was probably safer and more efficient. In the world we live in now, I can definitely see while millennials would definitely have more invested in stocks, equities, and like I said, cryptocurrency and stuff like that.
Yeah.
So
that's true. I agree with that one. Overall, like boomer wealth versus like millennial wealth, I think a lot of people like to just trash the boomers for like setting them up for not being able to do the things that like they could do. But also too, I feel like that a lot of boomers have that, you know, boomer mindset where it's like, oh, well, you know, I did it so easily, so you can do it too.
Okay.
And they don't look at the numbers. So I think that to
explain
bridge
what you said, the first sentence you said.
the first thing I said was that a lot of millennials blame the boomers for like how things are right now, where they can't afford homes and everything is like so overpriced.
No, I don't think you can blame the boomers on that. I mean, they're just doing, you know, the hand they're dealt.
Right.
You know?
So really, we need to blame the Fed and.
Well, it's just cycles. It's just cycles, and you know, we talk about it all the time. You know, at times there's a feast, at times there's a famine, and you know, the individuals that prepare for the famine are going to come out better, and they're going to have opportunities during these times.
Right.
So at the end of the day, it comes down to that. You know.
Yeah, I definitely agree. It's why it's important that we want to emphasize to y'all that you can't rely on others for this kind of stuff. Like, you know, if you're like, oh well, maybe the government will help me get into a home, so you know, I'm just gonna just wait for them to, you know, help lower interest rates somehow or help with my student loans. It starts with you having that foundation apart from the government, apart from other people. It's okay to have people help you out, but in general, I think that you should be mindful of what's going on in your situation and kind of like play the game with what's going on. Like be positioned correctly. You know, do good with the things that you can control, like, you know, your spending habits, your, you know, gaining knowledge on these things, you know, saving money, like those things is what I think is going to set you apart. And it's not going to be always, oh, well, I'm just going to just wait until they fix this. What can you do? Absolutely.
And I want to say one more thing, if it's okay. I wanted to say this earlier, but I kind of forgot because I was thinking about three things at once. But if you had to compare debt from boomers, millennials, you know, 35 to 35, and I'm just making a guess, but I would, just like we said, the boomers had more in real estate, millennials probably had more invested in stocks, cryptocurrency. I would guess that millennials have more debt compared to boomers at 35.
That's actually one of the points on here.
Okay, I got ahead.
And like, but we can go ahead and actually move into that right now. That's a good segue. So another key finding is the debt between millennials and boomers. Overall, it says millennials were more likely to be in debt. 68% held any kind of debt at 35 compared to 43% of boomers. So at 35, respectively, 68% of millennials had debt compared to boomers that had 43%. So
a large majority of that, I would say, is probably student loans. But but I'm sure there's still, a lot of reckless credit card spending and
I think that
cars.
I would say definitely student loans, because going back to our college episode that we did a little while ago, it was found that the majority of debt that people have now are student loans. Also considering too that the fact that college increased in price means that people couldn't afford college now compared to back in like the 80s, when I can get a degree for like $1,000. Like even if they had a loan, they can pay it off with how things were back in the day. So, I'm not surprised that millennials have more debt. He just talked about credit cards, lifestyle inflation, but also to inflation in general. I think that people would rather borrow on credit cards and live off that than try to go down a traditional like save and budget correctly and not rely on debt, compared to boomers who probably had a lot. Well, they had better purchasing power back in the day compared to millennials now.
But the psychology of their parents probably led to them saving a lot more, I would assume, versus millennials having a pretty low interest rate environment, a lot of money printing, or quantitative easing, whatever you want to call it. It's just the view on debt and the way that the market's going up is just different.
Yeah.
So I can definitely see just being a little more loosey-goosey with the spending.
Yeah, we talked about home ownership in the in the wealth part, but they also have their own section for that as well. It says here about 62% of boomers have become homeowners by 35. Contrasting with the 49% home ownership rate among millennials at that age.
Yeah.
Additionally, 10% of millennials live with their parents at 35, compared to only 6% of boomers.
Yep.
So at 35, it was showing that more boomers were able to get a home at 35 compared to millennials, and more millennials are living with their parents at 35 than boomers did. I don't live with my parents, but I also don't own a home. And it's because of how inflated home prices have become and how rates are really high, and there's like a bunch of like inventory issues. It's also like, it's very competitive.
Yeah.
In that in that market. So it's tough.
And you could technically afford a home right now if you really wanted to. But for you and your spouse, you're waiting for the right opportunity and have a certain amount of cash saved up.
Oh yeah,
That's smart.
Yeah, it does go into that thing where it's like, from like a cultural perspective. We actually talked about this before this episode, but boomer parents were like, you need to buy a home. It's a part of what you do as as an American, as an adult. You have to buy a home. But I think that more millennials, outside of the fact that it's harder to afford a home, get a down payment and maintain the mortgage payments monthly, I think a lot of them are like wanting to sit on the sideline, kind of like wait and see if things could work out. Now, this isn't like a real estate episode. I could tell you that real estate can continue to go up from here, and we're never going to see prices where they were back in the day ever again. But it's just something that I think a lot more millennials are probably taking a chance on than just jumping into buying a home like the boomers did.
If something doesn't cash flow for me, I don't necessarily consider it an investment. I still view a house that I purchased one day, I'm not going to view it as an investment. Yes, I'm putting equity into it, but I still view it as an expense. Yes, the real estate, the land is increasing in value, but the actual house itself will not keep up with the value that it should appreciate at unless I make changes inside the home and update it. So it's to me, I know if you go by the books, yes, it's an asset, I know, blah, blah, blah. But to me, I view it as an expense. Like it's something that I want to have. It's a house, it's a beautiful thing, you want it to be a true home for your family. You want it to be loving and inviting.
Right.
But it's not, I don't view it like I would like a rental property or equity or, stocks or something that collects interest. So but I don't want to turn this into, I could go on to a whole tangent about that, but
yeah, like you're,
when people get so especially the boomer generation, why aren't you putting equity in your house? Like you're missing out on all, but I just, like I said, I view it as an expense in the long run. It can't cash flow for me. One day when I can sell it at an appreciated price, but I'm still gonna have to move somewhere else.
Yeah.
But
that's the thing, is that it's a stable, historically, it's a stable, consistent return. I mean, I would even, I don't have the stats on hand, but I would say it can get as high as like 10 to like 12%. So it basically rivals like the stock market.
Yeah, you have to live there though.
Right. You have to live there.
You have to maintain it.
Right. But then also too, when you think about like paying off your home one day and the fact that you won't have a mortgage and you won't have to pay rent, I think that's very enticing for a lot of people. But But I agree, if it's not cash flowing for you, it shouldn't be something that you're saying, oh well, I'm doing this because it's a good investment. It's for the sentimental value.
I'll counter argue myself and say I know people that bought houses, 2020, 2016 up to 2020 for a very good price, and the price increased in some situations 300%.
Right.
And they were able to sell those homes for a profit. And some of them, in some situations could downgrade, but they ended up being probably their best investment in their early investing career. So, but again, they had to sell it.
Right.
So, but yes, that was definitely profitable. So yes, there is a great counter argument, but I would still argue and say that was a very rare occurrence, and it doesn't always happen like that.
Right. The thing is with like homes too, and I know this is not like a real estate versus stock thing, but you're tying up that equity in your home, and getting that equity out means that you have to do, like a HELOC or stuff like that to like get the equity out of your home. Comparing that with like the stock market, if you're savvy, which most people aren't, including myself, like if you don't know how to do it correctly, it could be, you might as well just be putting money into like the S&P and letting it ride, and then those two become comparable almost at that time.
You want to hear something crazy that I saw? Excuse me.
Good.
I want to say it was a Swiss. Forgive me if I'm saying the wrong country. I want to say it's a Swiss, but they were comparing the amount of millionaires. I believe it was the Swiss compared to the United States, and the percentage was much higher from the Swiss people. And a correlation to that was that none of them bought houses; they all rented throughout their whole life.
And interesting.
But it was I don't know. But we're not going to get into all that today. I know a lot of people get very worked up about that. So
I think
it's easy to be on one side of the fence when you don't own a house like us. So I'm aware of that as well. So
well, it's also too both are good stuff.
Tear me up in the comments if you want to. I understand.
Like they're good investments, both of them, because if you think about it from like, would I rather do it or not?
Yeah.
Then as long as you're making decisions that are going to appreciate or cash flow, there's good sides to both. It's just dependent. It's just that one side is not better. And I feel like the boomers will always say you need to buy a house.
Yeah. Because
if you look at the numbers and you want to have a paid off home, sometimes the sentimental / peace of mind stuff doesn't correlate to the math. Generationally, you're going to get two different answers. If you want our opinion, I think that they're both great. I think that you should be diverse and you shouldn't put everything into one or everything into another. It's why you should be diverse in your overall net worth.
And I'll close that thought and say, it's not so much about buying a house. You need to build assets. You need to pay off debt.
Oh yeah.
And when you're in a financial situation where it makes sense for you to purchase a house, that's when you need to do it.
Right.
There's really no other way to look at it, honestly.
Right. Whether or not I have a house now or I'm waiting, I'm still making stacks. So, let's get real.
Let's go.
No boomer is going to tell me otherwise. Let's get real.
I knew it was coming. I knew it was coming.
So, and I love the boomers. I love y'all. I'm sorry. Going to the last point that I have on here for millennials versus boomers in finance is net worth. It says here about 14% of millennials had negative net worth by 35, which means their debts exceed their assets compared to only 8.7% of boomers. Yeah. And I gotta say, I think that this goes back to the things that we were talking about, how things were a bit easier for boomers back in the day in terms of their opportunity.
How dare you say that?
Well, opportunity. I mean, y'all can come in for saying this. Their opportunity, how much things cost back in the day, like those things played a big factor to how much debt they had, because,
They still had to make a choice to do those things the correct way, though.
they did, but you can feed a family of 5 on a 45K salary back in 1990, when compared to now, where 100K is like the new middle class.
Yeah.
And this was just on like one income, and yeah, they might have been scraping, but sorry, you can't be a household of like, I'll even say 3. Your spouse and your child with a home on a 45K salary. It's impossible. You're not going to be able to survive unless you have a shack and you have no debt and you're probably barely scraping by. There's just, mathematically, it doesn't make any sense when you consider how much inflation has been killing your purchasing power and how expensive everything is right now.
Yes, sir.
Like when it comes to boomers, and like, how much, they're like debt to asset ratio, it makes sense why a lot of them have been able to be, or their longevity has been able to be well, because they were able to get a lot of this stuff on the cheap, like their education, their home, and they had time to build up all those assets. If they're, like what he was saying, if you buy your house in 1990 for like 100K and now it's worth like 500, that's a $400,000 profit. And, that's with having a career that you were able to continuously get promotions, build upon your success and be able to increase your income. Whereas in a lot of millennials, that amount of time is a lot lower and it's probably harder for them to do. But it's like we were saying, I'm not complaining. That's just how things are.
Now, are millennials a little lazy compared to boomers? Yeah.
I would say so. Because it's that cultural shift of like furloughing enjoyment and furloughing all the things that like millennials value now, like your mental health. Like they were like head to the grindstone. I got to provide for my family. I need to do everything that I can to take care of my family. Whereas, now it's like, well, millennials might be, this might be more of like a Gen Z thing, but like, millennials seeing now the mistakes and how their parents are now, they're like, maybe it's not all cracked up to be, just going out there and doing all the stuff that they did. And even going from like millennial to like Gen Z, I feel like now is starting to figure out like everything that happened in the past was just a bunch of nonsense, and I do only live one time, so I'm just gonna just work a job and see if things clear up. But a lot of them are still living with their parents and they probably can't afford a home either, so we might become the new boomer.
Yeah,
millennials might become the new boomer.
Yeah,
and
one day, that's gonna be an interesting episode. We'll do it in like 30 years, man.
Yeah, well, we're definitely gonna be doing one at some point about the largest wealth transfer. This is just a part of life, when boomers go and they either leave their home to their kids, or if their homes get on the market and that floods the market, who's gonna be the ones that are gonna be taking those? We have our company that we're gonna be starting soon. Who's going to be taking those homes? It's the millennials. We're going to be able to have the money, the resources, if it's not all killed by friggin' inflation, we're going to be able to have these things on the ready compared to the Gen Zers and all of them.
And I don't want to bring this up because we could talk about this for a long time, but do you think the inheritance that's coming through from the boomers down to millennials, do you think that it will be managed well? And then we can end, because I know it's a loaded, we can talk a long time about that.
I would say if your parents didn't teach you how to do it, it's just going to start the cycle all over again. It's just going to be like, they might make bad investments, or they might not invest. Their homes and assets are going to get eaten up, probably sold off. And then there's going to be a new generation of like the boomer mentality where it's like, oh, well, things are screwed. I need to work on getting these things.
If you can't manage $1,000 well, you're not going to manage $1 million well.
Oh, no.
So
No.
if you can't do the small things correctly, you're not going to do the big things correctly. So
That's true. That's true. But yeah, that's going to be it for us on this episode, Millennials versus Boomers. If you're a boomer, I'd love to hear your input. If you're a millennial, if you're a Gen Zer, whatever era that you're in, I would love to hear, your thoughts on this. I have love for everybody. You know what I mean? Like I'm not blaming boomers. I'm not blaming millennials for being lazy. It's just something that comes up based off of how things are in the, in the overall economy and in the culture. It's something that we all have to navigate, and I love to be able to get different perspectives.
yes, sir.
Because I like to be proven wrong. Well, I don't really make any statements that are like this is what it is, but we're just going based off of like statistics and what research says. We want to create a community where boomers, millennials, Gen Zers, we all can be able to come together and make something great. We want to help each other out. I'm not blaming boomers for their thoughts on us being lazy. I'm not blaming millennials on thinking that boomers killed us all.
It's okay. It's okay.
It'll come out.
Hey.
It comes out, but it's okay because we're all here to help each other out. It's better to be somebody that takes this information and is being constructive with it.
Absolutely.
Than just harboring hatred towards one.
Yes, sir. Yes, sir. Hey, I enjoy the wisdom of boomers.
Oh yeah.
Anywhere I can find wisdom, I'm going to take it.
Yeah, because they've lived through times that are...
You can't replace experience for sure.
And history will repeat itself over and over and over again. So the more wisdom we get, the better,
Absolutely. Oh man, I think that's going to do it today. Until next time, let's continue to give and grow.
Yeah, give and grow. See you later.